Hello again, everyone, and welcome to the Options Mentor. Are we going to the moon? Well, you have to wonder, don't you? The market just keeps on going on what we all have no idea, right? They think they're getting rate cuts, or they're running up on rate cuts. The Fed says, hey, not so fast, won't be March. Market goes down, disregards it then, and runs up where we're at. So I'm going to start out today with looking a little bit at the charts, and I'm also going to talk to you about something really interesting we're going to do this week, and that I'm going to follow a trade all the way through, meaning that whenever I do this video next week, I'll show you the trade that I put on. I'll walk through what happened with it so you can walk through it with me and see how it turned out. All right. But first, let's talk about where we're at in the market. So let me share my screen here. And we'll just start out with the SPX chart. Now, what I've done here, just have a daily chart that goes back several years, 5 years, I think. But what I wanted to really look at was the last time we did all-time highs. You can see we banged around, and then finally punched through a little higher, pretty abruptly down. Now let's take this back. I'm going to show you where we're at the moment. And this will be a little easier to see if I bring this back down. So just as I had been describing, there's resistance here at 4,800. Bang, bang, bang. We finally got through it. Then, as I said, we're going to have resistance at 4,900, which we did. And I mentioned that we'd probably have resistance around 4,920, which we did. And then I thought we'd have it at 50. However, we did bang through that pretty good. So here we are all the way up here. Could we hit 5,000? Yes. But to me, and I could be wrong, one guy's opinion, and I don't use technicals really much in my trading. You know, technicals, of course, are looking back, and you're trying to learn from history what the future might look like, which can be very informative. But a lot of times, you know, in a market like we're in now, it's a little more difficult to discern what's going on, I think. That's just me. But anyway, to me, I think could we go to 5,000? Sure, maybe 50-20. I think that would probably be it. I don't even know if we're going to make it to 5,000, but we might. So this week coming up, there's a lot of Fed speakers. And, you know, whenever the Fed's talking, the market's listening, and, well, they're pretending they're listening at least, and then they're taking whatever it is they want to take out of whatever it is that a Fed governor might have said. And just be aware that what one says one day, another one could be interpreted to be saying something else the next. Things can go back and forth. But I think what it probably will do here is I think we might have some chop, maybe a little more up and then some chop down, I'm thinking. But even if I'm wrong, what I'm going to talk to you about is going to have a high percentage chance of working anyway. So let's go over there and look at the SPX. All right, so what I've done here, you go, Mark, another calendar? Are you kidding me? Are you kidding me right now? Well, the thing is, I do a lot of flies too, but I want to show you something in this low volatility market that's been working well. That's why I've been hitting on calendars so hard. But anyway, so here's what I want to do. Wherever we're at tomorrow, unless, you know, if we opened up with some precipitous down gap or something, 60, 80 points or more, then we probably have to revisit doing something a little different. But if we start out where we're at, a little lower, you know, 20, 30, 40 points lower, that's fine. Or, hey, what if we start up 100? That can work too. So I don't care if we gap up, but what I want to do, or hang around here or go down a little, I just don't want to do this trade if we really, you know, somehow would open up down to 4,900 or something, which I don't anticipate. But tomorrow afternoon, soon things are right. Look at, or at least in the last 2 or 3 hours of the market, wherever you're at in the world, doesn't have to be afternoon, obviously. What I want to do is put on a call calendar that is for not this Friday, but for next Friday, Friday the 16th. And then we're going to buy the long 4 days later. I don't mind 4 days here in lower volatility. Plus, hey, Monday, February 19th, I think that's the day. Yes, the market is closed anyway. So we have to buy Tuesday if we wanted to buy the nearest one. So we are selling the 16th, buying the 20th. And what I want to do with it is maybe put this thing on about oh, maybe 10 or 20 points below wherever we're trading at the time. And you could even go as much as 30. But what I've done here, if we closed at 49.58 and I used the 49.50 calendar, I think we could even go lower, maybe even 49.40 calendar. Because of the skew that's been going on in call calendars now a few months here, look at the upside. Now, while it's not true that you'll never lose on the upside, I think that's an error in the charting software here, but they do work very well to the upside. They're staying pretty flat. And by the way, what hurts the calendar? You know, besides price movement, of course, is volatility going down against it. Well, if you look at volatility, it's been staying pretty firm. And it will stay firm, I believe, if we go higher in particular, because people know we're at all-time highs. So they're going to buy protection to protect those positions. And when they do that, that makes the VIX go up. So I don't fear volatility going down on us. And even if we did get a hard downturn, well, of course, volatility go up because they'd be buying even more protection. So what I want to do, maybe 10 to 20 points below where we're trading in the last 2 or 3 hours tomorrow afternoon, put on a call calendar for the 16th, buying February the 20th. And then what we're going to do is try to get anywhere from 7 to 10% of this trade based on what we pay for it. And then we're out. So let's say you put this on for $300 per contract. Well, then what I'd be looking to do is maybe get around $25, $30 per contract and a little bit more for my fees, whatever that may be for you, and then close it. And then if I have to, I may have to add things to this or whatever, but I'm going to walk through that with you next week, whatever I did. So tomorrow afternoon, I'll be putting on a calendar somewhere 10 to 20 points or so below where we're trading. And then I'll take it from there, work the trade, and then I'll be back here next week reviewing it with you. I think this could be very instructive for a lot of you, who maybe have never seen this before, what you do with these things. And this should be a good instructive week for us. Whether the trade works or not, it will still be very educational. As always, I really appreciate all the people that have subscribed. We're up over 1,000 now. I really appreciate it. Lots of good comments. Please keep those coming. Please keep subscribing or have people, new people subscribe and share the word. And we'll be back here next week with the first time where we're going to walk through a trade that we did putting on tomorrow, walk through it next week. So everybody have a great week. We'll be back here next week for Super Bowl Sunday with an interesting trade history. Have a good one, and I will talk to you guys then. Bye-bye.